quota filled.
Alright, what's good everyone? Welcome to a new YouTube video. In this video, we're going to be breaking down how I made roughly $4,000 in about 6.5 minutes. Now, this trade was trading my 30-minute PO3 model. It was a trade that many people in my server that are learning from me had taken as well. Pretty much just breaking down what my logic was, why I was taking shorts at all-time highs, what my pre-market analysis was, and every little aspect of what led up to my entry. But as we can see, proof as always, live accounts, $4,000, and of course I'm just blurring out any potential important info. But as we can see, 3 minis, short scalp, 6.5 minutes, and of course here is the P&L. So before we do the trade recap and actually break down the confluences, we're going to show the trade recording first, and that's going to be playing right after I'm done speaking here. So enjoy that and be ready to learn.
You need me to get that shit together so we can get together. You need me to get that shit together so we can get together. You need me to. You need me to get that shit together so we can get together. You need me to get that shit together so we can get together. You need me to.
So hopefully you guys enjoyed that trade recording. Now we're going to get down into the market, what I posted in my pre-market and all that. So as you can see, that has been the only trade I've taken so far, nothing else. And as we can see, once my TV was hit, or generally in that area, price started to slow down and this generally start to accumulate. Now, when it comes to my specific analysis going into the morning, the very first thing we're going to do is reference my pre-market analysis. Again, every single morning I post private pre-market analysis, just giving my general thoughts going into the morning, just to make it very, very clear whether we should be looking too long or looking too short. As we can see, October 2nd, 2025, today, I posted going into the morning just to summarize everything. I would like to see price immediately draw towards the 2-day open / the 25% mark of the range going into New York Open. And now let's look at that on the charts. So before 9:30, this is what we're presented with. We can see right here, the very first thing we do as a power 3 trader is understand the development of our higher time frame and lower time frame power 3s. Within our weekly power 3, we can see very clearly that ever since the beginning of the week, which we are going to go back here, since the beginning of the week, Sunday, 6 p.m., we can see that we had classic accumulation, manipulation, and since then been distributing. We've been distributing higher, and in that distribution that had started yesterday, overnight within our daily power 3, as I'm going to mark out right here, had continued that distribution. So daily open right here and weekly open down here. So now going into the morning, going into our 9:30 open, this is ultimately what we're presented with. And actually, I should go back one more candle. This is ultimately what we are presented with. Well, I'm presented with a bullish weekly profile. However, in the development of our daily power 3, we are not continuing it. Obviously, it looks like boom, bullish, we expand, we're continuing it. But as a actual trader, we're not just going to instantly click buy as soon as the market opens. No. As a power 3 trader, what we need to see is proper manipulation beneath significant time openings. As I stated, true day open and the 25% mark. The true day open, the reason that is significant is because it is the midnight open, in which ICT has referenced that a lot. I mainly reference it in the sense of quarterly theory. Nonetheless, it's a reference point. It's a reference point because in the sense of our daily open and our midnight open, we have essentially had no strong manipulation below it. Even though we had a few wicks below, there was no actual strong manipulation. So below our daily open and below our 2-day open, there is nothing. There is no manipulation to confirm continuation higher directly going into New York Open. So as a power 3 trader, our focus in this scenario is that this entire expansion higher, this entire move higher, is all just manipulation. That's our mindset. It is manipulation to then entice market open, to sell off, to rebalance the range below, to put in manipulation below our 2-day open and our daily open. And from there, we can look to long. And that is what I posted for my 2 scenarios. Is that we're presented with 2 different views. Either the first view is someone who wants to play continuation on the trend, in which you have nothing. You have nothing, you have to wait. The other view, the other point of view, is that of a power 3 trader seeing price setting up to be bearish within our daily power 3. Again, I made this very clear. You can see very clearly that no messages are edited. This is exactly what I was looking for. So the plan going into market open was to look for 2-day open or the 25% mark of the range. The only reason those levels specifically is simply because they are our low-hanging fruits. And the reason we're anticipating the low-hanging fruits to be hit and not, something like EQ the range or any lower than that is simply because we are in a bullish trending market. And ICT has spoke about this many, many times, is that in a bullish trending market, what we do is not anticipate ranges to be balanced out constantly. That's not what we see. What we see is higher time frame PDRA, lower time frame SMT. And that is what causes price to play continuation. So understanding that is understanding that EQ the range is a relatively unlikely draw liquidity. It's just unlikely to be hit. And when we get down to like the basics of market structure, what actually is a unbalanced range? It's when price either lacks buy side or sell side delivery. And when we look at this market right here, we can see right here that this entire move lower, let's just take a guess at what that is. It's all sell side. It's all a move lower is sell side, and this entire move higher is all buy side. So we have a balanced out range already. So logically speaking, the move above here, so we have the beginning of the sell side of the range, or I should say the sell side of the curve we have right here, buy side of the curve right here. What we have is a balanced range below here, meaning this should be where price reverses from. Now, not literally in the sense of as soon as we tap that, we're going to pump hard. No, what I mean is everything below here is balanced out, as we have both sell side and buy side delivery. Due to understanding that, we can then set a realistic target in premium of the range. And that premium for me was the 25% mark and the true day open. And as we can see, let's just go into the next 4-hour candle. As we can see, we perfectly respected that. We put in our manipulation below the true day open, below the daily open. I'm gonna go back here, and we rebalance our range. So now we have both buy side and sell side delivery. Now there's one more thing I want to reference, and that is which of a market maker buy model. That is why the logic of both sell side and buy side applies, because it's not just random market structure. It's specifically a market maker sell model transforming into a market maker buy model. And currently we have completed a market maker buy model, and that's what we're presented with right here. And these market maker buy models, or I guess I should just say these market maker models, are presented as back to back weekly power threes. As beginning of this weekly power three all the way back here, as I should mark out right here, that was the beginning of our initial market maker sell model. That market maker sell model, as you can see, the initial weekly power three opening. From there, we had a new weekly power three right here. From there, forming smart money reversal, sell side of the curve, causing and initiating a new smart money reversal, going into a new weekly power three, and that is what we're presented with on the following week. Again, they all play off of each other. Back to back weekly power threes being representing a market maker model. Now, market maker sell model into market maker buy model, and this is what we're presented with. So what I'm getting at here is that this entire move lower is clear sell side delivery. This entire move higher is clear buy side delivery. So let me just change the colors really quick. So this little range in here, this little box where they do not touch, that is unbalanced. But as soon as these two boxes touch, that then causes the range to be balanced out, because then we have both buy side and sell side delivery. And I'm pretty much just explaining how to understand higher time frame narrative. This really had nothing to do with, well, it had an impact on me having a short bias, but it was specifically due to the fact that we had no manipulation below our true day open and no manipulation below our daily open, which made me short biased. So that's a general breakdown of the overall analysis going into the morning, why we could validate shorts when price is literally trading at all-time highs and all that. Now, when we get down to the specific entry, that is what caused people to trip up on the most. And we're going to break it down. So go down to the lower time frame, and we'll go back here. What do we see? What do we see is 9:30 opens up, and what we do is immediately manipulate lower. However, you look over at YM. Actually, we'll go for the few candles up until my entry. So my entry was pretty much right here. This is what we're presented with. Now what we have presented with is a few different things. One of which is an SMT with the previous day high. I'm just going to go down to a lower time frame so it's still present. So we can see right here that YM is very clearly not above the previous day high. And Q, previous day high is right here. ES, previous day high is right here. ES and Q are both above the previous day high. YM is not. We have SMT, the previous day high, going into market open. Then on a lower time frame, directly at market open, what we then get is another lower time frame SMT. And QES both put in a failure swing, while YM runs out the high, giving us now a higher time frame SMT and a lower time frame SMT. From there, 930 expands lower, distributes lower, forming a 1 minute city. Now, most people would see this and want price to trade into it. And in fact, that's initially what I wanted. The only reason we could validate shorts, even though that 1 minute city is not traded into, is based off what ES and NQ did. And that was this. Initially, we wanted that NQ to trade into here, as ES and YM both did not have a fair value yet. But seeing this, ES ran out the previous 1 minute high, YM ran out the previous 1 minute high, NQ failing to, gives us another lower time frame crack correlation. This was also confirmation to me that price does not need to anymore trade into this 1 minute city. We just don't need to, because this crack and correlation, it's not that we don't need to, it's just that the market is essentially telling us with this crack and correlation right here that we are not going to. It's not that we don't need to, it's just that we're not going to. Due to that, understanding that, I'm like, okay, potentially now I can look for a short. I then waited for price to give me something a little bit more clear. And that was this. Right here, we have a up close candle on NQ. That can be classified as a order block. That order block gets tested. We test that order block. From there, 15-second time frame, 15-second CISD. And put it simple, that was my entry. 1 minute order block, 1 minute crack correlation, lower time frame SMT, and then of course the higher time frame SMT with the pre-stay high. Those were my confluences for my trade. I'd executed that short off this 1 minute CISD, and that was my position. 1 minute CISD, and from there I'd entered and had TP'd at the true day open as we were anticipating. And now, if I was feeling really ballsy and I really wanted to take a risk, I would have held everything until the daily open, because again, we didn't have, or at least I would have trimmed at the true day open and then held a runner. I'll probably, like, maybe an old version of me who didn't want to lock in profits would have trimmed at the true day open, trimmed at the 25% mark, and then sold the last contract at the daily open. But I wanted to ensure that I was going to lock in profits, because again, keep in mind, we are trending right now. So I didn't really want to take a risk, because again, we're already fading the hard time frame by taking shorts. But nonetheless, this opportunity was presented, so I took it. Nonetheless, all of my draws on liquidity for the morning were hit. We put in the manipulation below our daily open, and now this is what we're presented with. Price since then has reversed, and now we're back to trending higher. Do I know if we're going to put in a new high day at the end of the day? No idea. As again, the range below is technically still unbalanced, but when we reference YM over here, YM in fact reached EQ, NQ ES failed to. I don't have it drawn at ES, but it failed to, giving us another high time from crack and collision at the lows. And that could easily confirm higher prices from here on out. I'm probably not going to take anything else the rest of the day, but we'll see. Of course, as always, if there's any questions, comments, concerns regarding anything I talked about, please just ask in the comments below or join my server and ask it there. I will say though that there was quite a bit more quarterly theory confluences and more specific terms that I did not use that involve quarterly theory concepts. If you want to learn that, check out my server and their prospects. That's where I teach everything in regards to my model in terms of quarterly theory. You can check that out. Even for just a month, you can take away everything. There's nothing is gatekept. We share everything in terms of quarterly theory, in terms of my model, and how to implement it into Po3 market maker models. So if you want to learn it, feel free to check out. Until then, just wait until the next YouTube video and keep learning from there. So catch you guys all in the next video.